Welcome to the Real Estate Guys radio program. It's not just important what you invest in, but where, and markets are different across the world. Today we're going to focus on studying market trends to find excellent real estate investments. And we've got an awesome guest today on the Real Estate Guys radio program. If you've been listening to the Real Estate Guys for a while, then you've heard about the legendary Investor Summit. Simply put, it's the highest level event we do, and the content, faculty, and attendees are amazing. If you're serious about taking your real estate investment to the next level, consider joining us. You'll spend more than a week with like-minded investors, world-class educators, and real-world professionals, and you'll have a blast. It all begins June 11th, 2020 in Fort Lauderdale, Florida. Visit realestateguysradio.com and click the tab that says Summit to learn more and get on the advance notice list. We'll spend 2.5 days on land, learning and networking, then jump aboard a luxury cruise ship for more classes, roundtable discussions, great dinner conversations, and a ton of fun. Go to realestateguysradio.com and click Summit and make plans to hang out with the Real Estate Guys and an all-star faculty on the 18th Annual Investor Summit at Sea. Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. With me, as usual, it's our co-host and financial strategist, Russell Gray.
Hey, Robert.
Real estate is everywhere. Everywhere you look, there's so many places to invest. And what we have to think about today is, and we've been talking about this in the show for some time, is where we are in the market cycle. Now, when we say that, what you have to understand is there's not just one market cycle. And some market cycles run kind of concurrently, and some lag, and some are opposite. And we're going to talk today about not only market cycles, but how you make a decision about where to invest depending on where we think the puck is going.
Well, it's really interesting because when we talk about the word market means usually to a real estate investor a geography.
Yeah.
And it clearly is. Of course, within a geography, there are submarkets. And when you buy a property, it exists all the way down to a neighborhood. So it is kind of fractal in that regard. But it's also more than just geography. It's also demographics. With residential assisted living, we talk about the silver tsunami. That's a demographic. Now people are talking about the millennial and the kind of real estate they're interested in. This is just residential, because the next thing in market is product niches. There's residential, there's commercial, there's retail. I mean, you could go on and on. So there's a lot of those things to look at. And then we look at economic cycles, and those things are, of course, affected by demographics, but they're also affected by the business cycle, the expansion and the retraction, the ebb and the flow. Now we've got, with globalism and global trade and trade wars and different things, we've got things that affect it. So it's an extremely complex. It's really an ecosystem, an economy, but it's an ecosystem of all these sub things going on above the surface, below the surface. And what 2008, I think, taught a lot of real estate investors, and I'm certainly in that club, is there are things happening outside of your mainstream focus that have the ability to impact you. And because real estate moves slowly, you don't just day trade real estate. You have to be looking out a little bit and be thinking a little bit more. The good news is there's so many people that have been through different market cycles. And we live in an information age where the collective experience, the tribal knowledge of the world's investment community is really available on tap. And if you pay attention, you can go back and look at history, listen to these people's experience and glean their wisdom. I learned a lot from watching what my father went through in business. He wasn't a real estate investor, but I watched what he went through. And then I've, of course, lived long enough that I've had some experiences. And so you glean all of that and you try to figure out, okay, where are we at? What is the potential to come next? Because I can't predict the unknown. How do I position myself so that I mitigate the risk of maybe a negative cycle and I capture the opportunity in an upward cycle?
And understand, cycles aren't just in real estate. Cycles are in industry and so forth. One of the disadvantages to real estate in some ways is that we often say you get married to a market. When you buy a property, you're going to incur some expense to get out of it. So you don't generally buy and sell daily like you might in the stock market. You can pick different industries. Hey, this industry's hot. I'll go invest there. We talk about the hot money goes into whatever the hot deal is. But real estate investors are more long-term than that. So it's not like there's one great real estate market. Instead, our whole thing is matching your personal investment philosophy, who you are as an investor, what you're trying to accomplish, your goals and dreams, with markets that make sense and product types, demographics, psychographics that make sense to you. So it is a lot to think about, but the good news is you've got time, real estate moves slowly, and you can be in more than one market. Now, having said that, we have a guest who's in a lot of markets and does a lot of thinking and research about this. And for most investors, when you buy a property in a second market, that's a diversification through real estate. You're still buying a house or a multifamily, but it's in a different market, so some diversification. So as you're adding to your portfolio, that's important. I think you don't want to get carried away and own in too many marketplaces where you have too many different things you're thinking about and different tenant landlord law and all that kind of stuff. But to focus on a handful of markets can make a lot of sense long term.
Well, I think the real thing is we look at a market in its current state and what's going on in the world. And we say, okay, based on what's happening in this market at the current state of affairs, it's likely to produce the result that I'm interested in. But markets are dynamic and then things change. And as they change, you're like, you know what, this was a great market and there was inventory and it was the right demographic and the right price point and the numbers made sense. And over time, all of a sudden, it doesn't make as much sense anymore.
Sure.
And so now I've got to think about moving. And so, having the criteria clear in your mind about what's a fit does two things. One, it tells you when you're looking at a new market if it's a match, but it also tells you when you're reevaluating zero-sum thinking, the market you're in, is this still the right place to be or is it time for me to make a move? So sometimes it's not about diversification, although that's important, but it's just about trying to maintain a particular focus and the market changes and you have to change with it. And sometimes that means changing markets.
And every real estate investor has a path of evolution. Kind of the common thing is the green house to the red hotel. People invest in single family houses and decide at some point they want to invest in bigger stuff. But you know what? You can make a lot of money in single family houses, and especially because you can look for these market cycles, which sometimes tell you when to get into a market, and you can not only create cash flow, but rise as equity gains. So there's lots of things to think about. We got a great guest when we come back. You're going to meet Jarrod Garfield. We're going to talk about market cycles, and he's going to give us some specific markets he likes right now. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. And now is the time. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2020 Goals Retreat, January 17th to 19th in beautiful Lake Las Vegas, Nevada. This unique weekend has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at realestateguysradio.com under events or call 888-489-7723 extension 18. Get your life back on track physically, spiritually, and financially. Attend the 2020 Goals Retreat on the third weekend of the new year. Click events at realestateguysradio.com to register. This is no dress rehearsal. Live the life you were meant to. Visit realestateguysradio.com or call 888-489-7723 extension 18 today.
If you want to learn how you could potentially increase your net worth by over $1 million and quit your job in just a few short years, listen closely for the next 60 seconds. This is Brad Sumrock, and over the past 16 years, I've helped thousands of people invest profitably in real estate. But not just any type of real estate. I specialize in helping people syndicate large apartment buildings so that they can be business owners and investors. In today's competitive environment, it's even more important than ever to leverage an experienced mentor, invest in your education, and have a team of advisors that has established relationships nationwide. And so many people right now seem to be struggling to find deals and then get them funded, but yet Sumrock students are thriving in today's marketplace. We've purchased nearly 7,000 units and nearly $1.5 billion in purchase volume over the past 12 months. And with the new Trump tax laws, apartment investors are positioned now better than ever before to pay even less in taxes. To find out more, send an email to apartmentsnow@realestateguysradio.com and you'll get my recent presentation called Why Apartments Now. That's apartmentsnow@realestateguysradio.com.
Hi, this is Kim Kiyosaki. I'm the author of Rich Woman, and you are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, heard every weekend on this great radio station and all the time at realestateguysradio.com and your favorite podcast outlets. We're talking today about markets and market cycles, and the gentleman you're about to meet is involved in a whole bunch of markets. Let's say hi to Jarrod Garfield. Hey, Jarrod.
Hey, Robert. Thanks for having me. I'm excited to be with you today.
We are thrilled to have you. You've been in real estate a while, and before we get into the specifics of what you do, paint the picture of why real estate, why you got involved in this, and why you've become so interested in market cycles.
You know, Robert, as a kid, I used to go to my grandfather's real estate office, and he had one of these 1970s Coke machines where you open the glass door and you get the glass bottles out.
Yeah.
And he'd give me red cream soda and talk to me about real estate from the time I was about 9 or 10 years old. And we'd go in his Cessna 172 plane and fly across the state looking at land development deals. And he was kind of a hero to me, and he was just really into real estate. And so I, from the time I was a kid, wanted to be in real estate and follow in the family business.
Yeah, well, that's awesome, right? Having a legacy in that and being able to see it and appreciate it. Not everybody wants to follow in the footsteps of their parents or grandparents. And so that's led you to this idea that real estate is going to work out. How to work out for your grandfather?
Well, you know, he made great wealth in real estate. I mean, he had a great lifestyle. He had a beautiful Victorian mansion, owned some restaurants, opened the first self-serve gas station west of the Mississippi, and he was real creative. So one of the things he did when the Utah Jazz were announced, he went ahead and found the land for the Salt Palace and put his commission in, and he was a minority owner in the Salt Palace where the Jazz used to play.
Wow.
And so he had done very, very well. And as he got greater wealth, Robert Kiyosaki always talks about, 4 greenhouses, 1 red hotel. He decided to go into bigger deals. And so he went from developing subdivisions and doing a lot of rental properties to a 400-unit Class A apartment complex. And so at the peak, he was doing really, really well. But what happened was about 1987, when I was about 13 years old, the Congress changed the laws on burning coal. And he had just completed that 400-unit Class A apartment complex, and it was in a town called Price, Utah, which was nothing but coal. They didn't have a lot of other jobs. It was a one-horse town, didn't have the 5 pillars. And he went to his business partners and said, look, guys, I'm going to lose my shirt. His house was 2 payments away from being paid off.
Wow.
And he said, if you'll sign everything over to me, I'll take the losses for all of us. And he had a heart attack and died that December.
Wow. So big lesson in that, right? So all your eggs in one basket and diversification and so forth. So now fast forward, you get involved in investing in real estate. How did you start?
Well, I started buying houses when I was in college. So I had academic and leadership scholarships, and I was at the University of Georgia, and I went down and got a student loan so that I could use it as a down payment. I'm not sure if you're supposed to do that, but we went out and bought some foreclosures from a bank, and we flipped our first house and made $45,000 my senior year in college. And so I got up, built a pretty large portfolio of real estate, and then I ended up working with Robert Kiyosaki, and the lessons that I had learned from my grandfather that were painful for me watching him kind of came back. This was in 2006, and I heard people that were training, they said, well, you can make money in any market. And while that was true historically, you could flip in one market. If it was a flip market, you go to a different market if you wanted to do cash flow.
Yep.
But at the time, the markets that they were advising some of these clients in, they had gone up 25% a year for 5 straight years.
Yeah.
125%, it wasn't sustainable, and it was a bubble ready to pop.
Yeah, absolutely. And this is one of the key things. Now, we talk about different types of markets that are more cash flow oriented, where houses don't appreciate a ton over time. And then there's appreciation markets, but certainly they don't stay that way. Dallas, Texas was a cash flow market for a long, long time. Today, more of an appreciation market. You could probably say the same for Houston. So markets do move and change. And I know today you spend a lot of time watching that and, to the best degree possible, anticipating it.
Yes, I developed a spreadsheet that analyzes 278 metropolitan statistical areas across the entire country on like 80 different metrics.
Wow.
Everything from poverty level to crime level to test scores to school test scores to median affordability to the appreciation for the last 5 years, the last year, the last quarter, building permits, population growth, job growth, everything you need to know. And we've identified some markets where you can really outperform many of the other markets.
Yeah. Now, you've been able to start, of course, where you know the marketplace and you were investing in Georgia and so forth. And then when did it first occur to you that, you don't have to invest where you live and take that jump into a market in another place?
So after I was working with Robert, I moved back to Atlanta. It was where I was from. And Atlanta had been number 1, 2, or 3 for population growth for the entire decades of the 80s and 90s.
Yep.
It would go back and forth between Dallas, Houston, Phoenix, and Atlanta. So I knew Atlanta was fundamentally a good market, and it wasn't really overbuilt. But because of the subprime mortgages, it had melted down, and we were buying 25 homes a month that were built from 2000 to 2007 for $35,000 to $50,000. The price of the lumber, much less the land.
Way below replacement cost.
Yeah.
And we were very heavy in Atlanta too at the time, and made a lot of sense for that. And so a lot of folks see that, and it scared them. I mean, today we look back and go, wow, we should have bought all that stuff. But at the time, if you remember, you'd be like, oh gosh, something must be wrong. And so there was inactivity. And of course, with the benefit of hindsight, that turned out well. Then, as things do, that market is a strong market, and so prices got to a point where maybe it didn't work quite as well.
It was like Russ said earlier, the investors are the first ones to come in, the investors are the first ones to leave, and what we saw was Colony, Blackstone, all the big Wall Street funds came in. They were willing to pay rates and accept lower returns that I didn't want to accept. So we realized that if you didn't want to compete against the big boys, you could go into secondary and tertiary markets and big towns, and the cycles in some of them didn't follow the rest of the country's trend. They crashed actually 4 years later. So I went into Huntsville, which was a great city with lots of diversification. They call it the NASA of the South and the Pentagon of the South. You've got NASA there, you've got Boeing, Lockheed Martin, Raytheon. You've got manufacturing there with Toyota and Mazda having a plant they just announced. The FBI just moved their headquarters from Langley, 4,500 jobs to Redstone Arsenal there in Huntsville. So it's getting a population explosion.
So Huntsville's been a great market for you because the price disparity to rent. Talk about what those numbers look like.
We were buying foreclosed houses in C plus neighborhoods, working class neighborhoods, for $28,000 to $35,000, and this is like a 1,400 square foot, 3-bedroom, 2-bath area in a neighborhood that you'd feel safe in, but it's a lower income neighborhood, but it's safe. And we were putting an average of 30,000 rehab into them, so everything's completely new, turnkey, and our clients were all in for 55 to 60,000, and here 5 years later, those same homes are selling for 120. And so, and the cash flow is really good. But just like markets change, you have to do different strategies at different phases of the cycle.
Right.
So now that Huntsville is no longer in absorption and it's in expansion full tilt, there's no reason to buy turnkey in C-class neighborhoods for 115 and 120 if you can instead buy new construction build to rent for 147 that rents for 1350, and the incomes are $20,000 higher, and the schools are 8s and 10s instead of 1s and 2s.
This is a great point because it's not only the cycle of where the market's moving, it's what you do in that cycle. So depending on the time, you've done the rehab kind of markets, you've done now buy and hold, brand new investment. Talk about kind of the different types of real estate, single family real estate that makes sense depending on where the market is.
There's been a lot of talk over the years. Marco Santarelli is a good friend of mine and yours. And there's a lot of companies that specialize in turnkey product. And I think turnkey product, if you're investing out of state, is a wonderful product if you can get in a good neighborhood and get a well-renovated property with professional management. And for a lot of the syndicators, if they can buy in volume and hold it in their fund, properties that are fully renovated with tenants in place, that's great. But I believe there's 3 different products that work. And when you're in an absorption market, you want to buy foreclosures at huge discounts. And at that point, it makes sense to have them be almost brand new, totally renovated turnkey. But as you move into expansion, I like what's called a rent-ready or a rental resale type of product. And this rent-ready product is where you go buy a newer house. Instead of a 1960 house, you might buy a 2001 to 2008 property from a motivated seller, but it doesn't need much work. You might put $4,000 or $5,000 into cosmetics, and maybe you're picking it up for $109, and it rents for $1,000 a month. But you're in better schools. And so even though it's not fully turnkey, it's fairly new, and you're in great demographics.
Turnkey, typically people think about it's all done for them. It's kind of the fat cow. Somebody went in, found the property in whatever shape it was, did the work necessary, got a tenant in, got it up and running, and now a lot of investors don't want to be bothered with the rest of it. But then there's the investors that say, no, I want to find that junker. I want to buy that repo. I want to go in and get a foreclosure, and I'll do that work and capture that. And it's not right or wrong. And so I guess that also plays into what's available in the market. So a market gives you whatever the market gives, and you have to decide how do you take that and turn it into something that makes sense.
And you have to be able to understand where the market is in the cycle. So I still like buying in Huntsville because it's only been going up for about 2 years. It's been going up pretty well for 2 years, but you see a lot of new construction. The building permits are just exploding everywhere. They're doing a lot of new building and stuff like that. And because there's so much population growth with nearly 9,000 jobs, 9,000 jobs is a big deal in a town of 500,000. They expect Huntsville to pass Birmingham as Alabama's largest city, and Birmingham's at 1.2 million, and they say it's only going to take 20 years for Huntsville to pass it up. And you're only an hour and a half south of Nashville. But see, as we go through that, so there's 3 products. The one is the turnkey. The second, where the work's been done for you, like you said. The second is the rental-ready properties that are ready, and they're nicer and newer and better neighborhoods.
Yep.
And then the third is the build-to-rent.
Yeah.
In Atlanta right now, we have great opportunities of $129,000 3-bedroom, 2-bath homes with a garage, brand new, never lived in. We'll rent for $1,100 a month, and we've got about 18 subdivisions right now where we have product like that available in Atlanta. And Atlanta is growing by the size of the city of Charlotte, North Carolina over the next 20 years. Huge growth, 13 Fortune 100 headquarters there.
We love when we see growth in a market, and one of the byproducts is often that the rents don't rise quite as fast as the prices do, because remember, single-family houses, sometimes the buyer is an owner-occupant, and they'll pay more for it. So this is part of the moving the markets. Now, we'll come back to some of the different product types and how that might work in the market, but let's talk about some of the markets you like. Before we're done, you've made a great report available to our listeners with the 10 markets you like the most. We won't be able to discuss them all today, but tell us some of the markets you like and why.
Well, I really like Huntsville. Huntsville is fantastic. We've got build-to-rent properties that are $147,000, 4-sided brick, brand new construction, renting for $1,350. So they're almost hitting the 1% rule, but you're on brand new construction, which is more likely to experience appreciation.
And less cost in terms of maintenance and all that for the first few years, right?
Yeah, with builder warranties.
Yep.
Can't beat that. And then there's also a lot of the rent-ready product that's still available there. We're doing Birmingham, same thing, all 3 products, and Montgomery. Columbus, Georgia, which just had the armor division a few years back, moved from Fort Knox to Columbus. You've got Fort Benning there. You've got the headquarters for Aflac. Tissus is there, Synovus Banks, so that's strong. Macon, Georgia has really high returns. I've got new construction in Macon for $90,000, this brand new, that rent for $900. And then our absorption market, where we can get returns out of this world, is South Bend, Indiana. I just picked up a 9-unit apartment complex for $78,000. I'm going to do a $55,000 renovation on it, be in it for $130,000, and it brings in, right now it's $3,000 a month right now. By the time I do the renovation, it's going to bring in $5,800 a month on a property I'm in for $130,000.
Now, when people hear about secondary and tertiary markets, they may not be as familiar with the big drivers and so forth. And we always look for, multiple stories or pillars in a marketplace. So how do you decide when a market has enough diversity versus a market like your grandfather invested into, where there was a one-story, a one-horse town, you said?
Well, I think it's really important that you've got lots of employers. You can't be in a one-horse town. And sometimes that can even be for a big town. If we look at in 1990, Seattle took a bath when Boeing laid off, and Houston was just, the Houston Texans used to be the Houston Oilers, right? Because unfortunately, Houston was pretty much just oil. You've got to be able to have diversity of employment, different types of things. So if the city fathers have really planned well, cities like Huntsville, they just opened a Remington Arms plant. You've got automotive with Honda and Mazda. You've got the FBI, which is government. You've got aerospace. They've got the #2 research and development park, second biggest research and development park in the world, with more PhDs per capita in Huntsville than any other city. In Birmingham, you have steel, and you have banking, you have architecture. In Montgomery, you've got state jobs, 35,000 state jobs. It's the state capital. You've got Maxwell Air Force Base, which is federal government jobs and military. And then you've also got the Hyundai plant, so manufacturing. And they've got some aerospace. So you have to have multiple industries. And I compare that to a town like Milledgeville, Georgia, which had the state mental hospital, and it had a big carrier plant. Both shut down in the same year. And that town, it may take 40 years before it ever recovers. So I think you have to be big enough. I like to invest in towns that are at least 300,000. I think if you're in 50 or 75,000 population, it's way too small, unless it's a suburb bedroom community.
Talk with Jarrod Garfield about markets and market cycles. We got lots more when we come back. Plus, we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
The Real Estate Guys are throwing a party and you're invited. Join us at the New Orleans Investment Conference, November 1st through 4th. Now in its 45th year, it's the nation's longest-running investment conference and features some of the biggest names in economics and investing, including Doug Casey, Dennis Gartman, Rick Rule, and Peter Schiff. The Real Estate Guys are speaking in multiple sessions, attending lots of others, and we're hosting a hospitality suite one of the evenings for our friends and listeners, including some VIPs for you to mingle with. So make plans today to join the Real Estate Guys at the New Orleans Investment Conference. With everything going on in the world, no serious investor can afford to miss it. For all the details, send an email to neworleans@realestateguysradio.com and it will tell you how to get upgraded tickets and join the party. That's neworleans@realestateguysradio.com. And we'll see you in New Orleans.
Do you have a self-directed IRA invested in a syndication? Guess what? It's a ticking time bomb. Why? Because IRAs get hit with UBIT taxes, even Roth IRAs. Hi, I'm Damian Lupo, and we fix this problem for you forever. It gets even better because using the EQRP, you can literally get rid of taxes from all of your gains forever and protect your nest egg. The EQRP is the best vehicle to get it done. IRAs can't do it, not even Roth IRAs. You see, UBIT happens whenever any type of IRA invests in anything with debt. Don't worry, even if your IRA is already invested in a deal, we can kill that tax. Our team at Total Control Financial is here to give you control of your retirement money and free you from that deadly IRA tax forever. Want to learn more about the EQRP? Send an email to eqrp@realestateguysradio.com. I'll email you my special report and send you a copy of the QRP book. Paying a 37% UBIT tax is stupid. First step to getting rid of that tax is to send an email to eqrp@realestateguysradio.com today.
When it comes to successful rental property investing, it pays to be picky. Pick the right markets, pick profitable properties, and pick great property management. That's easier said than done, but we've got great news. Terry Kerr and his rockstar team at Mid-South Homebuyers are going strong in Memphis, Tennessee, and Little Rock, Arkansas, too. So for a top-notch turnkey single-family home rental property, whether you're a new investor or have a large portfolio already, pick Terry Kerr and Mid-South for a truly A-plus investing experience. To learn more, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com.
Hi, this is Frank Holmes, Chief Investment Officer and CEO of U.S. Global Investors, and you are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio show. Thanks for tuning into the program. Hey, come on out with us to New Orleans. It's the 45th Annual New Orleans Investment Conference. It's an amazing time in a fabulous city. And to make it even better, we've got a Real Estate Guys listener suite party with lots of the faculty. All you have to do is send an email to neworleans@realestateguysradio.com to get all the details to attend the conference and come to our private party. That's neworleans@realestateguysradio.com. We're talking today about market trends, studying the markets, finding great markets that work and great properties. And we've got Jarrod Garfield with us. Before we get back to that interview, it's time to play Real Estate Trivia, your chance to win a prize by knowing today's Real Estate Trivia question. In just a minute, I'm going to ask you a question that has something to do with real estate, and you're going to figure out the answer. The first person with the right guess is going to get an awesome book called Whatever You Are, Be a Good One by Lisa Congdon. It's amazing quotes that she's put to pictures, and it's inspirational. When you hear the question and think you know the right answer, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Include your name, the answer to the question, and your mailing address so we can send you your prize. Before we give you this week's question, last week on the Real Estate Guys, we asked this: which U.S. state has the highest average lifespan for pets? Well, believe it or not, if you live in Montana, your cat will live 2 years longer than the national average, while dogs in Montana tend to live 1.5 years longer than average. We love our pets. Maybe that's a reason to move to Montana. Here's our real estate trivia question for this week. Speaking of states and markets, name the official fish of Georgia. Yeah, you may not realize it, but the state of Georgia has an official fish. Which fish is it? If you know, then fire off an email. If you want to guess, do the same thing. Trivia@realestateguysradio.com. Include your name, the answer to the question, and your mailing address. And the first person that gets it right is going to win Whatever You Are, Be a Good One. That's today's real estate trivia question. We're talking about market cycles. Markets change over time. The personality changes, the jobs in the industry change, and as real estate investors, we want to meet those needs. We're talking with Jarrod today. Jarrod, you've been looking at markets for a long time and looking for the clues. And there's this misnomer about we can only look in the rearview mirror. But in fact, through the spreadsheet you built and through your just watching and observing the markets, we are kind of looking into the future. Talk about that part of it.
Well, Robert, what you've got to be able to do, people don't understand that all the data is there. Now, it's harder for things like large apartment complexes or industrial space. I can't predict for those things near as well. But with single-family housing, I can look at building permits. Building permits are going to tell me whether we're overbuilt, and I can compare the building permits this month to the previous year's trend and see whether we're really expanding. I can look at the roads and how many roads are expanding. I can go down to planning and zoning and see which roads are being expanded, which interstates are getting more exits off. I can go and look at the schools and see if they've had to add trailers out because it's growing so fast. We're looking at new jobs. What new jobs? What are the big announcements that the Chamber of Commerce has come and said, hey, we just landed this big plant or this big company moving to town. But we like to look at a lot of things like population growth, job growth. You've got to be able to look at and understand, the economics of whether it makes sense. First of all, fundamentally is the cash flow. What's my ROI going to be in that market? What kind of cash-on-cash returns are available? I got to look at the median home cost. We don't like to invest much more than 20% below the median home cost or 20% above the median home cost. You get too much lower, and you're dealing with lots of headache, problem tenants, and
turnover, vacancy.
Yeah, and you get too much higher, and you can get priced out, and the returns get difficult. Plus, the houses get so big that the cost, if the tenant does damage, can eat up your profits fast. So we like to be able to look at all of those things. Then you have to get into the livability. What's the poverty rate? And it's really important to learn to be able to compare apples to apples when you're looking at pro formas. It's not just what's on the paper, because one person can illustrate and say, well, I've got a 20% return over here, and then you can look at a different market and say, well, I've got the same property, and they're both claiming that they're B+ properties. I see a lot of junk that's in D and F neighborhoods where people try and pass it off and say, well, we only do B+ properties. And it's because what they do is they don't look into the demographics. You have to know the poverty rates, the income levels, the crime rates. So you've got to be able to dig down into all of that type of stuff and look at the appreciation, because your C+ stuff may show a lot higher cash flow, but it's also not going to appreciate. And one of the biggest things I learned in Atlanta, I have clients who bought 4 properties and made $500,000 over a 9-year period. And $300,000 of it was off of the appreciation, and only 168 or 170 of it was actually off of the cash flow. So I think it's a mistake to only buy cash flow. You want to make sure that you're getting a diversification. And if you get some high cash flow, great. But buying properties that give you a hybrid of good cash flow and appreciation is really smart.
Yeah, it sure is. And you can look at a property right now and its performance and check with a few property managers and figure out cash flow today. But cash flow today isn't the same as cash flow tomorrow, because maybe more inventory comes online or maybe jobs leave. So this is why it makes so much sense to pay attention to what the various cycles are doing. But there's also other factors. So let's talk about something like tenant-landlord law. There's certain places where the law favors landlords. There's certain places where the law favors tenants. How does that figure into the equation?
Alabama and Georgia are extremely conservative, and they're very pro-landlord. They're also pro-business. They're right-to-work states. But when I've had to handle evictions in the past, and most of the time we don't, most of the time the tenant will move out if we offer them a bonus and say, hey, if you're out by this point, we won't do the eviction. Usually they'll give us the keys and leave it broom swept. But when we do have to do an eviction, basically when you go down to the court, the judges just say, well, did you pay your rent? And they say they try to come up with all kinds of excuses about the baby needed milk. And then the judge says, I don't care. Can you pay the rent today? And if they say no, they say, all right, well, you're out. Can you be out within 7 days? And so it's very landlord favorable, both in Georgia and Alabama.
Yeah, good to know, because a lot of times people don't think about that part of the equation. And then also just the availability of services. If you're going to be doing a property that needs some work, well, you better make sure there's tradespeople available. If you're going to be basing, this on industry, you want to make sure those jobs are solid and so on. So that's why there's a little homework involved. It's one of the things we appreciate about the way you approach a market. It isn't just getting all fired up about cash flow. It's let's look long term. Real estate, by its nature, is a longer term investment than a lot of other things. If I buy an ounce of silver today, I can sell it tomorrow. If I buy a stock, I can sell it tomorrow. Real estate takes time, and it costs money when we trade it.
Well, and I can tell you too, I've done some syndication, and I'm so glad that I came to your syndication event. I learned that you guys could have saved me a lot of money. In fact, your attorneys were $50,000 cheaper than the attorneys I paid, and we raised about $7 million. And I can tell you from having owned my own fund that if you don't take into account the turn cost, it's not just the ROI on paper after all your expenses. When the tenant moves out, you got to be able to factor that in if you want to pay your investors a return. And so, very important to be diversified, to make sure you've got some B and B plus quality assets, and maybe even some A minus, some new construction mixed in. I think that while there's a great place for really high cash flow properties, you want that to be a small segment of your portfolio, not an entire portfolio of things illustrating an 18% return in a C-plus neighborhood.
Well, this kind of ties into the three different methodologies that you talked about, and that's really what you do. Is you help people figure out markets that make sense, and then within that, these product types, which means that you're dealing a lot of times with resale properties that need some rehab, sometimes not as much, and then new construction. So talk through that. How do you help an investor understand what makes the best sense for them?
First thing we like to do, you usually hear about this in the paper asset world, but we like to do an investment policy statement. I think it's very important that somebody sits down and says, okay, we're going to explain what a A-minus property is, what a B plus and a B minus and a C plus, and what the variations of what you can expect from that investment, because they perform differently. And then after we've done that, we need to kind of say, okay, well, how much are you going to let this asset appreciate? What's your minimum cash flow that's acceptable to you on a C plus or on an A minus property? And then what's your strategy? How long are you going to hold it? What's your exit strategy? I think people, Stephen Covey always says, begin with the end in mind. And I think that's important in real estate. You need to know what your exit strategy is and how you're going to do it. Are you going to sell to a hedge fund? Are you going to hold for 30 years? Or are you going to hold for 7 years, wait for the depreciation on your bifurcation to kind of end on your cost segregation, and then 1031 exchange out of the properties and let somebody else worry about the roof once it's 10 years in? We like durable products. I think it's important to have luxury vinyl plank in the houses, no carpet. We went to the expense of doing granite in almost all of our houses, no laminate countertops, because you can't put a hot pot and burn the granite. You don't get water on the seams and have it all puff up and ruin the countertop. So we found that even though it was $400 more for granite, that by the time we replaced the laminate in 5 years, you're saving money by being durable.
Not only that, tenants prefer it. It looks great. It's new, right? I mean, so that's part of it too, because we're in a competitive environment.
Yep.
And you don't want to just lower your rent to get a tenant. You want to make sure they walk in and they go, wow, this would be a great place to live.
And you'll keep them longer because none of your competition have granite and luxury vinyl plank and all new lighting. And you may get, we get on average about $100 more per month on rent than our competitors. But the most important part is we're attracting the best possible tenant for that house that would live in that neighborhood, because you want the best tenant in the house.
Now, Jarrod, I know a lot of folks will come and buy multiple properties from you in different marketplaces, but we've got a lot of listeners. They're new to real estate. Maybe they don't even have an investment property yet. And many of these types of properties might work really well. Talk about kind of the price ranges and the sizes of the properties so listeners can get their mind around that.
So I've got a 5-bedroom, 2-bath house right now that's available for $109,000, rents for $1,100 a month, built in the 1970s. It's like 2,600 square feet with a 1-car garage. That's in Huntsville. I've got an Airbnb that we have available in South Bend that's $80,000 fully furnished with a net of $32,000 a year projection at 25% occupancy. We've got brand new construction in Atlanta or in the Macon market for $90,000 that rents for about $900 a month. New construction, 1,000 square feet, 1-car garage. In South Atlanta, I've got 3-bedroom, 2-bath houses with a garage, 1,400 square feet ballpark, and those are going for about $129 and renting for about $1,150. So there's a lot of great opportunities right now. We're really excited about it. Columbus, we've got a brick home that is owned by a military sergeant that's selling. It's $97,000. We'll rent for $975. It's 10 minutes to Fort Benning, Georgia. So that kind of gives you a snapshot.
That's awesome. Now let's talk about some of the folks that are buying these properties, because some people do buy for cash. This is the kind of property that can be financed. What percentage of your investors are using leverage versus not?
The vast majority of mine have been using leverage. Now, we get some big 1031 exchanges where people will buy 30 homes at a time from us, and sometimes those will be cash.
Okay.
But for the most part, most people are using leverage.
Now, of course, we big fans of syndication, and it was great you were able to come out for the syndication event. Also, I know that people are interested in saying, wow, you've got a lot of inventory, and that's been hard. A reason we were doing field trips to Atlanta, and we kind of slowed that down because it was hard for our investors to find inventory. Now, we don't sell on our trips. That's not our model, right? We educate people. But if we go to a market, we educate them, we get them all excited about the market, and then nothing's available. That's frustrating for people. So you actually have inventory also for folks that want to think bigger, maybe syndicators want to get a portfolio.
We do, and we even do tours every second Friday and Saturday of the month. We do tours for investors that want to fly in, check it out. I think it's important to go touch it, see it, walk through it, meet the property managers, meet the construction teams, see the quality of the rehabs. We also furnish a full 6- and 7-page rehab scope on every property, so you know exactly what's been done to the property. And we're full disclosure. We give you the full price. We don't mind saying, look, we bought it for this, we rehabbed it for this. This is our holding cost. This is the closing cost. This is our profit. We don't mind you knowing exactly what we're dealing with. Obviously, for us to stay in business and continue to service you, I have to make a profit. But at the same time, we want to make sure we're providing value and that you're getting a great property at a great price. And so there's lots of opportunities.
That's a great thing to bring up because there's this paradigm, right? That for whatever reason, people want to know how much the seller made. So if the house makes sense from a perspective of I like the market, I like the rents, I see the price, it really doesn't matter if the seller got the house for free or if the seller paid more than they're selling it for. But people do want to know, and I think it's great that you're transparent enough. And I know if I want to be able to have more inventory, I like the property I bought, I want more, you better stay in business. You better be motivated. But your volume also allows you to make sure that those profit margins aren't crazy because you'll sell more, you'll have more investors, and you leave some meat on the bone.
That's right. Usually we're looking to make $5,000 to $7,000 a house on a lot of our smaller properties. And the funny thing is, as a real estate broker, I generally could make that on most of these houses just by being the real estate agent without even going to the hassle of finding it, funding it, rehabbing it. But the thing is, if you do volume, people come back to you. We're in it for a long-term relationship. Most of my clients have been working with me for 10 and 15 years. We have clients that now own 30 and 40 properties with us. That's what we want to do, is be here as you grow your fund. We want to be able to help you and even provide support to your investors. If you're raising money, we're happy to do a webinar where we can explain the product and explain the markets and explain why it would be somebody that would be good for somebody that's thinking of investing with you in your syndication. We can be an additional resource. And you talked about during your syndication seminar about talking about your teams and saying my team did this. I've done over 3,000 deals as a team. I've done bus tours for the guys from Flip This House and Flipping Vegas and Dean Graciosi and worked with Robert Kiyosaki. You know, we've done a lot. I've sold $70 million to the Wall Street hedge fund. So if you want to borrow my resume and help me present some of our inventory as an option for your syndication, we're happy to help support you even with your fundraisers.
Great point. If you're new in any kind of business, borrowing credibility, leveraging other people's skills and their experience resumes, big stuff. All right, well, Jarrod's put together a cool report. And Jarrod, in the report, you talk about the markets that you like, 10 specific markets that you like, get into a little more detail about that. And if folks want to get that, all they have to do is send an email to markets@realestateguysradio.com. That's markets@realestateguysradio.com. It's the market selection report. Don't invest blindly in 2019. What else are they going to learn in the report?
In the report, we're going to talk to you about how to choose the markets. We're going to talk about the metrics that be able to help you understand the difference between the different markets and why we like the markets. And I think that's a lot of it. Getting not just the method to the madness, but understanding, why you're buying in that market and why the metrics are so good, and also knowing things to watch. We like to be 100% objective. I think it's very important to say, look, this market has all of the following fantastic things. These are the one or two things to look out in this market.
Yeah, that's so critical. So if you're interested in that, just send an email to markets@realestateguysradio.com. You also get Jarrod's contact information so you can learn more about it. Boy, this has been amazing. Great stuff. Congratulations on your success. And I know Russ was salivating when you were talking about your spreadsheet, so it's good to have you on the program. Thanks for being here.
Thank you so much for having me.
There's Jarrod Garfield. We'll talk more when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from November 15th to 18th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 14 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful, the people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. 2018 was the biggest year in tourism Belize has ever witnessed, and this year is coming on strong. How does that translate to real estate investment? That's what you have to come see. There's all types of opportunity in Belize, including both long and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me November 15th through 18th in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market is interesting to you. But that ball's in your court. You'll receive their contact details, but they won't receive yours unless you give it to them. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on events where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize November 15th through 18th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under events. I look forward to seeing you in beautiful Belize.
Hi, I'm Mark Victor Hans. You're listening to The Real Estate Guys. If you want to expand your consciousness, expand your wealth, expand your future, and have more delight and excite in your future than in your past, keep listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio show. Thanks for tuning into the show. Hey, we'd love to see you at our Create Your Future Goals Retreat. The beginning of every year is the greatest time to sit down and figure out what you did right last year, what you're going to do better next year. And in order to do that, you got to get in touch with yourself. Coming out to Create Your Future, our 2020 Goals Retreat, the third weekend of the new year.
Yeah, I just want to chime in on that because it really fits in with what we're talking about today. You know, you listen to Jarrod, and Jarrod is very clear. He's very clear about the patterns and the principles he looks for in markets. He's very clear about his business model. He's very clear about his inner motivation, why he does what he does. You can see the drive. You can hear the drive in his voice. And, you know, if you're out there and you're at whatever point you are in your life, whether you're just starting out or you're starting over, you're taking your game to the next level, getting clear, beginning with the end in mind, as Stephen Covey said, and Jarrod quoted, is really important. And the Create Your Future is 2.5 days of you getting alone with yourself, even though you're in a room full of people, and Robert's up in the front of the room leading you through a series of exercises. First, just getting you into a mindset of being at a place where you can forget the hustle and the bustle and the daily grind. And it takes a little while. You know, we have that afternoon reflection or that evening reflection the day before to get you kind of out of the mindset of being, you know, just harassed with everything that's going on and racing around your mind, and then getting that place of calm and going through 2 full days, Saturday and Sunday. And it's full. I mean, it's full from morning until the late evening.
Yep.
You're asking questions of yourself. You're thinking about things. You're journaling. There's times in session. There's quiet times. So if you've never taken the time to do a really deep dive goals retreat, and if you have, you already know the value of it, and you probably are ready for a tune-up. But for that guy or gal out there, especially a young person who's trying to really figure out, what do I want to do? What do I really want to do? What am I willing to do to get it? What am I not willing to do? What's important to me? What's really important to me? What will motivate me to push past my procrastination and my fear and to break away from the negative people in my life and get around more of the right people? All of those things grow out of your thoughts and beliefs and a clear understanding. I say when you have clarity of vision, strategy and tactics become evident. If that's true in business, if that's true in investing, how much more is it true in life? Because business and investing are just subsets of the bigger picture of your life. Those things are there to support your life, not dominate it. If you want to build a business and a portfolio that you own and facilitates your freedom versus building a portfolio or a business that owns you and curtails your freedom, the difference between being trapped by your life or loving your life is your clarity of vision, and that's what Create Your Future will do for you.
You get all the details and sign up on our website at realestateguysradio.com under events. Well, we're talking about market cycles today, and oh my gosh, Jarrod takes this stuff pretty seriously.
Yeah, well, I mean, I can certainly relate. You know, he reminds me of me in terms of how hard I study the financial markets and the bond markets and what's going on because of what happened to me in 2008. And you hear that story about his grandfather, and just having seen that, and you realize, you know, that you don't want to approach these things haphazardly. And a lot of people do. A lot of people approach their investing in their business kind of haphazardly and kind of myopically. They deal with what's in front of them, and you can get away with that. But what happens is every once in a while, some big market cycle comes along and it hits you. And he took that passion and just turned it into practical action. I mean, you know, the spreadsheet, and just you could tell how confident he is, how quickly he just riffs, you know, on the things that he looks for, what he doesn't look for, what he does, how he does it, and the fact that he's been able to build a business and organize it so that it scales to be able to do things at volume, operate on thinner margins. You know, an entrepreneur's mission in life is to figure out how to serve more people better, faster, for less. And when you meet somebody who's really taken that challenge on, how can we create more value for more people and do it at a better price point and treat people fairly and relationships for life? I mean, he was just singing out of our songbook, and it was just so refreshing.
And he put his money where his mouth is. He got to Dallas for Secrets of Successful Syndication. He took notes. He played full out. He wasn't one of these guys that stood in the back trying to meet people to sell houses to. He was fully engaged. And that just shows you something when a student who's also a teacher will take time out of their busy schedule to continue to learn.
That's such a great point, because there are a lot of people who are really good at what they do. I mean, we've talked to a lot of them, and we ask them, hey, to come on the show and share your knowledge. And some of them, you know, are really articulate like Jarrod. Some of them, they struggle, right?
Yeah.
They have a hard time getting their message out. And we ask them to prepare reports, because we know you get interested when you hear the show, but you want to take notes. And, you know, you're doing what you're doing. You're mowing the lawn, you're jogging, or whatever it is you're doing when you're listening to the show. Driving, whatever, and you can't take notes. So we ask them to prepare these reports and to share their knowledge. It forces them in the process of preparing the report to organize their thoughts so that when they come on the show, they're more clear and they're better communicators. So there's all of that. And, you know, when you meet somebody that is got the gift of communication, the gift of teaching, and they practice what they preach, and they really have thought through what they're doing. I mean, candidly, I was very surprised. I did not expect it to be as good as it was. I didn't expect him to be as sharp as he is. And I'm really, really looking forward to developing this relationship with him.
So if you like the report on the 10 markets that Jarrod likes right now, all you have to do is send an email to markets@realestateguysradio.com. That'll also get you his contact information so you can find out more about where and how and why and when and the prices and the houses available and all that kind of stuff. Hey, coming up, we got some more great interviews. Very excited about this season in the Real Estate Guys world. And until next week, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers, low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct, asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.